Good evening. Welcome to the Forex Pro Charts weekly video for the week of October the 23rd, 2011. This week we're going to be taking a look at the Euro USD currency pair, and we're going to also be looking at some specific chart patterns that we're seeing that we see repeated on most of the pairs that we analyze this week. Let's start by taking a look at the monthly time period chart. As we see on the chart here, we've seen an overall pattern that is very repetitive, ranging pattern between the upper edge of our trading field and the lower edge of our trading field. And we see that currently price is in a long-term downtrend where price moved up in between this monthly armpit and the upper edge of our trading field in this area between the thick dotted black line and the solid black line. And this is an area where we believe that price is most likely to reverse, and indeed it looks like price did reverse in this area. So looking at an overall long-term trend on a monthly basis, we would expect to see price continuing to trend down until it reaches this area, when we then would expect that there's a higher probability for a reversal and for price to begin to move up. And we see that that happened here. Although you do see that in this area, price did not quite meet this reversal point before it reversed and moved up. Now this month, we see this final candle here, and we see that price has moved up very strongly so far this month, and has moved between a resistance and a support zone. And we see that this resistance zone is crosshatched, and we'll talk about that a little bit later on in the analysis. So price has moved up here to this resistance zone, and it also has hit this daily trend wall here, and there is another thicker monthly trend wall moving along right above. So we would expect that price could possibly turn in this area and continue back down, or it may, as we often see, spike through this zone and move up to one or the other trend walls and then use that as resistance and turn and continue back down. But we would expect that sometime at this area here that price would return its downward movement. Let's take a look at the weekly time period. Now, looking at the weekly chart, we want to focus on this area right here. We see that price was moving down, as we saw on the chart, formed this new support zone when price moved up very strongly last week, and we see that price made a significant movement of about 500 pips up last week. Then we see that price returned to this new resistance zone, hit the 60-minute armpit, and bounced back down. And you can see that a little bit more clearly in this view, and possibly in this view, where price came up to the 60-minute armpit, bounced back down, and then moved back up. Now, the chart pattern that we're seeing here is based on extended trend walls. I'm talking about this kind of triangular box that these extended trend walls form here, and then we have this stray trend wall also intersecting this box. And this is a pattern that we're seeing on most of our currencies, with the exception of, I believe, the UJ and the New Zealand. We are seeing a similar pattern of intersecting trend walls that is forming a box or possibly a flag, depending on the currency. The shapes are a little bit different. This one is forming basically a flag, and price is going to be contained within this box of intersecting trend walls. So we see here price moved down, came back up, bounced off this smaller trend wall, and then now is at a point where we're waiting to see if it will break this trend wall here or move back down. If it does break the trend wall, then it will have to break both this dotted trend wall and this thicker monthly trend wall before it can move up strongly. And this is a pretty strong resistance right here. This monthly trend wall will be a pretty strong resistance. So we would expect to see price move up and down for just a little bit while longer, because as you can see, we're reaching the end of this flag pattern of these trend walls, and price will break out one way or the other. And normally then, when price does break out of of a pattern, a flag pattern or so forth caused by by trend walls, when price does break out of that, then it will likely continue and move in that direction. So we're not talking, we see here that price did move a little bit out of this area, but it just spiked out, and it did not, we didn't see a full candle or even the major portion of a candle come out of this little area. So we would expect to see price continue in here for part of this week, and then see price break out. Now, in addition to seeing this pattern on the weekly chart, we're also seeing it on the daily chart. So let's take a look at that. So here we see this pattern on the daily chart, and we see that price is really bouncing in between these trend walls, these daily trend walls, which are these thinner ones, and have been doing that most of the week. So that is one reason why we saw price basically consolidate this week. And we can see that price is getting to the point where it's going to break this intersection, and we would expect then to see price either continue up, possibly then seeing the same phenomenon when we get up here, or price will break down this way, in which case we would expect to see price return down to this support zone. So if we look at this a little bit more closely, you can see where price moved up from the new support zone, hit the 60-minute armpit, bounced straight back down to the daily armpit, and we had both of our trade calls for our enhanced traders. This price movement activated both of those trade calls, which our enhanced traders set up on Sunday night. We had those two trades were successful, and then the trades closed out, and we saw price continue to move in this zone for the rest of the week. Now you'll notice that this zone is crosshatched, and the reason that this zone is crosshatched, even though price has not breached beyond the zone, is because of this price action during the week. So when we see price spend this much time in a zone, that is basically messing up the supply and demand balance, and this zone no longer has the strong odds enhancers that we need in order to make it a zone that we will trade. So whichever direction price moves, if price moves down again, this zone will still be crosshatched. Now, should price move down, back up, and then back down, we may see price form another zone, and we may draw a new zone based on later subsequent price action. But based on this initial price action here, and then prices return to the zone and spending 1, 2, 3, 4, 5, 6, 7, 8 days in the zone, that's entirely too long to have price just consolidating right in that zone. And this is going to weaken this 60-minute armpit, and it's not going to be good for very much longer. We prefer to see, of course, as you know if you've been following us, a pattern much more similar to this pattern where price moves strongly down, strongly back out. We do not like to see this consolidation and what we call meandering around in the zone. We do not like to see that, and that really diminishes the probability for a successful trade in that zone, which is why we then crosshatch the zone and do not trade it. As you know, our system is set up on extremely high probability trades, where we take those trades that are very likely to be successful, and then we minimize the risk that we have on those trades by taking the most probable portion of the trade and then closing out. So we see the same type of pattern on the daily time period chart that we saw on the weekly time period chart. It's just brought down into a little bit closer time period. So here's that monthly trend wall that we saw on the weekly chart, and you can see that price would have some room to move up if it did move up this way beyond the zone. Price would have some room to move up before it started what we projected as a longer down-term trend, but you would likely see this same phenomenon as price moved up into the point of that flag. Now let's go ahead and take a look at the hourly time chart, and then we'll take a look at charts for a couple of the other currencies. Now on the hourly chart, you can see much more clearly how price spent a great deal of time in this zone this week. And you can see where price did come up to the 60-minute armpit and move back down to the daily armpit, and then eventually, and even go a little bit beyond, and then eventually come back up to this armpit. So price has spent so much time in this zone that, again, the zone is really no longer a good zone, and we do not recommend trading it, and we ourselves are not going to be trading it at this point. So that completes the analysis of the Euro-USD pair. I do want to take the time to look at some weekly and daily charts of a couple of other currency pairs, just to kind of see that repeating pattern of intersecting trend walls. So here we see the EJ weekly chart, and we see here that the trend walls have formed a box that price is bouncing around in. Let's take a look at the daily chart. Here we look at the daily chart, and we see where price was bouncing around within this box formed by the intersecting trend walls. Then on Friday, the last day of the week, we saw where price did open and close outside of this box. So this would indicate to us that there is a possibility that price is going to be breaking down, and if it can breach this trend wall, could return to this support zone that we have crosshatched because of the risk. So here we see where price has moved outside of these intersecting boxes and has opened and closed, and so we could see another little bit of consolidation just because of these weak trend walls, the dotted lines here that are intersecting. We may see price bounce just a little bit, and then we'd expect it to see it taking some movement. Let's look at another currency pair. Here we're looking at the GJ, the GBP JPY weekly chart, and we see again this intersecting trend wall forming a flag pattern. We see that price has moved down to the lower edge of our trading field, formed a new support zone just below that lower edge when it spiked through, and now price has moved back up. We would expect that this is a reversal point and that price could be reversing, but as you know, we'll need to wait to see price breach some additional black dotted armpits before we see that as a long-term trend. In the meantime, price is going to have to navigate these trend walls, and that could cause price to either consolidate for a little while or have a small range, or even as price bounces off these walls, could cause it to retrace back possibly all the way to this zone and then back up. So again, we see this pattern, and let's take a look at it on the daily. And on the daily chart, we can see quite nicely here where price really is just following these trend walls right along and being contained by those trend walls. But we see that price is approaching this narrowing, this actual intersection point, and at some point price will break out, and then we normally would see some sort of significant movement. And in this case, it could well be, again, that because of these trend walls here, these intersections here, it could well be that we see price break out when it reaches this point and move back down for a retracement before it begins to move back up. Now, the reason that we draw these trend walls on the charts is for traders who are actively managing their trades, and particularly if you take trades in both directions, either if you have difficulty determining the trend or if you just like to be a little bit more active trader. Then when you're managing your trades and you're trying to decide when to move your stops, where to take profit, what your targets should be, you can take a look at these trend walls, because these will often signal the start of a retracement or a consolidation, where you will want to maybe more closely protect your profits or take a portion of your profits out in the event that price were to retrace significantly. In this case, the premium trader would overall be expecting that because we've reached this reversal point, that price could go up to this sell zone, and would be expecting price to go all the way that way. However, we've seen with other pairs that this can either take quite a while to happen, or price could easily turn back and bounce off this lower edge of the trading field, or even come down and bounce through this area and form a new zone. And so as price moves up, traders may want to take out a portion of their trade to lock in some profits in the event that price does make a significant retracement back before moving up to this zone. As I said, eventually we would expect to see price return to this zone, but by managing your trade actively and moving your stop or taking out a portion of the trade, say at this point, then you can protect yourself from losing the gains that you've seen on this trade. So I hope that information was helpful to you. It shows a little bit how you can combine some of the aspects of technical trading along with the supply and demand foundation of our trading system. So for more information or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com. You can follow us on Facebook and Twitter, and you can also take a look at our featured video, Introduction to Forex Pro Charts, to get some more information about our subscription services. Have a good week trading, and we hope to see you back next week.